Welcome to Yellow Tunnel. My name is Luck Harpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have a live discussion of current market sell-off, see if we have reached the bottom and some of the opportunities in the market. See if you guys have any questions. I'll be more than happy to answer your questions. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. My background is technology. I worked as a CTO of several publicly traded companies here in Chicago. When the companies went public, decided to manage my own money and use my experience building technology, building models based on neural networks, latest advances in artificial intelligence. So that's my background. I partnered up with Keith from Options Hotline, so we now have live strategy, so live trading room, the first hour of trading session, and the last hour of market hours, where we trade the signals that the model generates. And it's great way to complement each other's experience. So that's background. Disclosures are very important. I'm going to go to specific trade ideas, so please visit optionsclearing.com in case you are not aware of the disclosures or haven't seen them. Basically, I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's take a look at the current market conditions and see if we want to make any changes. Looking at the 10-year, let's look at the yield first, because after the Liberation Day, right, for initially market sold off, right, and interest rates drop, because usually, when people are concerned about the recession, people buy treasuries. But then the second wave of the sell-off, rates start going higher and reach all the way to 460, close to year-to-date high, with the fear of stagflation, and inflation is going to go higher. And at the same time, dollar also dropped significantly, right? Dollar also sold off, which considered to be a safe haven. Treasury, right? Usually, oh, Charles, very good. You're in. Excellent. Had to switch my computer on my computer. There is no chat for this app. No idea why. Okay, good. I'm glad you guys, Charles, thank you for figuring it out, because I was concerned nobody's answering any questions. But Charles, Michael, welcome back. David, if you guys have any comments, please type them in the questions or just say hi. I want to make sure that you guys can see me. John, Brad, Fred, let me know about that. Just type in your questions. Okay, perfect. But now we're back in business. All right, so dollar is below 100 level, right? These are very long-term support and resistance levels, right? If you look at the dollar and you go back to look at the weekly chart, right? So we're going back to 2024 low to 2023 lows, and 2022, right? The start of 22, and we were also at this level during the COVID. A little bit higher, actually. We were at 102 in COVID and then 100. So this is a very strong support level that spans over. Gloria, welcome back. How are you, Gloria? Thank you for joining. Can you type in yes if you can hear me, Gloria? Michael, David, very good. So spans over a long period of time, 100. Right, so that's an important support level. I mean, one explanation is because of the change in policies and kind of being this more protectionist. Sound is perfect, thank you, Charles. More of a protectionist approach, end of globalization, and that it's no longer safe to store your money in the United States, right? It's better to store it in Europe, maybe China, maybe Japan. So that is something that I'm watching very closely. I think this rapid drop in dollar is concerning for a lot of people, including US government, probably, but we'll see. I mean, weaker dollar in general is good for equities, right? Because that's the goal, is to export more and import less. And you can find that balance, one way is through tariffs, which is maybe not the best solution, but weaker dollar usually does allow other foreign governments to purchase more goods produced in the United States. So dollar drop, as long as it's not precipitous drop, I think it's stable. 10-year yield is also stable, right? We had a pullback in the past couple of days, so that's good. Spiders is trading at an important level, right? We've had a very sharp rebound when the tariffs got delayed and basically recovered half of the losses, right? We recovered half of the losses from the most recent highs to the most recent lows, from 480 to 610. We're right in the middle. There's a lot of support at 550. This was the support before, March lows before the tariffs were announced, right? That was the lows, and now we 550, and now we are right at that level. So if you look at the gamma exposure, right, all the positioning around the 550, this is, I would say, the line in the sand. 550 and 560, as long as we are, let's draw this out. So this is your overhead resistance, right? So as long as we're trading in this area, I would say we're neutral, right? So if we trade in between 62% retracement and 38% retracement, right, this is kind of your market neutral zone, somewhere between 530 and 560. If we drop below, again, if we drop below 530, that opens the door to revisit the lows, either 480 or 500, right? This is a very big support, right? Long-term support. I would say support number 2. And this is your support number 1, right? This would be negative, right? If we drop below this level, I would say this is negative for the market, 530. If we jump above 560, this would be very positive for the market, right? That means probably bull market has restarted. So earnings season has started. So far, it's not horrible, right? The idea, one of the bear argument is that S&P is overvalued, right? With the assumption that earnings in 2025 are going to grow in double digits, maybe lower double digits. That's the assumption. But with the tariffs and uncertainty, potentially, we might only grow in the lower single digits. So earnings season is important, right? That will get us into, the earnings part of the PE, right? The multiples. So far, banks are doing better than expected, right? I think, or not as bad as expected. And you can see today market, one of the leaders in market are your financials, your wealth management, Morgan Stanley, Goldman Sachs, JP Morgan, Bank of America, Citigroup. Those are the leaders for today. So looking at the data, right? I always go back to bar chart. So now we can look at the index, right, in the positioning. Let's, we have April expiration. Let's remove April, right? Let's forget the April. That expires this Thursday in 2 days. And then what happens after the expiration this week, which you can use the volatility, May expiration and let's see, June 20th expiration, right? Let's select all the strikes and just see what the market expects. So the one standard deviation, we are at the strike 575, 557.60, and on the bottom side is basically revisiting 500, right? You can see still very large position at 5,000, right? So we can see 5,000 strike or 500 in SPY is very large position. That means that people have a lot of puts, right? You can see open interest of 917, right? Put open interest. Not a lot. I mean, in relative terms, compared to the current positioning in April, right, which has $40 billion. In May, there is only $20 billion. In June, already $55 billion. So there's a $55 billion worth of gamma in June. So people are already hedging and going into June. And again, the most important positions, you can see the biggest concentration is 5,000 strike. That has been a very strong support for the bulls. If we break through that level on negative news, people are already building 4,000 level, 4,000 or 400 on SPY. And on the upside, 6,000. In short term, you see probably the next big resistance is that 570 level. I don't see a lot of positioning all the way to 570. So on the positive news, you can assume that we could get to the 570 level, which would be this overhead resistance. This was the peak from the sell-off in July of 24, right? We had a 10% pullback. That was the highs of that July 24, right? And we are basically slowly approaching that level. So there, based on this chart, right, there is these are the levels we want to consider, right? One scenario that, between now and May, we move more than one standard deviation, right? This is 570 level. Right, we said that this is 575 level, right? So one scenario, we're, approaching 6,000, right? Basically, we're testing all highs, right? That's scenario number one. Scenario number one, we're retesting 6,000. Already a lot of positioning at 6,000 level. The second scenario, we're trading in the range somewhere between 575 and 500 SPY or 5,000 SPX, right? That's just a multiple of 10. Right, so that's scenario number two, right? One standard deviation, if you look at the Bollinger Bands, right? If you look at the Bollinger Bands, not Bollinger Bands, sorry, distribution of possible outcomes, right? So between 500 and 575, that's scenario number two. Scenario number one, two standard deviation move to the right because maybe end of the war between Russia and Ukraine, maybe tariffs get paused. Not paused, but we reach an agreement with most of the countries, including maybe even China, right, on what tariffs look like. Right, then you have scenario number one. And scenario number three, we don't reach an agreement within the next 90 days, not a lot of progress. And then, maybe some dislocation due to not the carry trade or basis trade, right? Basis trade, there's a lot of dislocations between the treasury market and futures treasury market that people are concerned about. And that's why one of those that can explain one of these big moves in treasury market and currency market are these carry trades, right? Or dislocation or arbitrage between different markets that gets quickly can be unwound. So that's scenario number three, right? So how many of you say scenario number one, Vlad, we're moving two standard deviation to the right because earnings are better than expected, Trump administration, there's already countries are lined up to please Donald Trump. I think he was using a little bit stronger language, but but deals are coming. Deregulations are coming, lower taxes are coming. So scenario number one. Scenario number two, kind of this is what we have, and it takes time to negotiate, especially with China. Maybe we'll reach an agreement with Japan and South Korea, but China, it will be ticked for tat, for maybe in the next 6 months, like similar to 2018, kind of lasted all the way to September, October. So then scenario number two, we're trading between 500 on SPY and 575, right? Market neutral. And scenario number three, we're in recession. There are more signs of recession, right? Unemployment ticks up, inflation ticks up, earnings are weak, negative GDP, and et cetera, and we're in recession level, another 10, 20% pullback from the recent lows. All right, so how many of you say scenario number one, Vlad, this is life is good, economy is strong, we're in a bull market, and this is just a temporary pause. Scenario number two, we're trading in a pretty wide range. VIX is still around 30 last time I checked. Right? VIX is around 30. Spiders is turning negative as I speak. And then scenario number three, recession. All right, more people are joining. Michael, Gloria, Jack, Kevin, Pam, Tim, David, Charles. What do we think? Michael, thank you. Uncertainty, 2 or 3, Michael. 2. All right, no ones, no threes. Charles, maybe 3. Okay, fine. I'm gonna go with 2. I'm going to go with 2. I'm going to trade if we have 2, with the idea that obviously based on the news that I cannot predict, we could break through this 5,000, which is very difficult. I think this, the gamma speaks for itself. It's going to be very difficult to break 5,000. I think one standard deviation on the upside, 575, I would fade the rally, right? Somewhere between 550, 570, I would start lowering my exposure to the market, right? Short term, I think we're in the beginning of the earnings season, and so far it's better than expected. I'm going to stay optimistic. Seasonality wise, usually April, May are good times. So if we can break 550, right? If we can break 550, then 570, 580 is where we're going to go. But we do need to, first things first, we need to break through 550. There's a lot of gamma left in April, but starting next week, if we get a batch of good news, I don't know what it could be, then we could get above 550. I think we have retail data on tomorrow. Yeah, so we have retail data tomorrow. We have expiration, initial job claims claim, Powell speaking tomorrow. So we have some positive potential source of news on Wednesday and Thursday. Then, happy Easter and Passover for everybody who's celebrating Passover and Easter. And then, what do we have? Not much till, there's some manufacturing data. People are going to scrutinize, services, PMI, manufacturing PMI, and see what are the odds of recession. Home sales, but, probably nothing of interest up until, May. Any questions? All right, so how do we help on Yellow Tunnel? So on Yellow Tunnel, we have different services. One that I think for aggressive short-term trader. Right now we are in traders market, right? Buy and hold. We're still down, I don't know, 10% from Spider's high, right? 538, 10% would be what, 55 points? Yeah, somewhere like 10, 15% away from the recent highs. So, the bull market could resume, right? And we could just continue making highs. There's less and less people that believe in that, including myself. So I think this is going to be a trader's market as opposed to invest. So you have to find these support resistance levels and gamma exposure and other indicators and decide when you want to go long, when you want to go short. So aggressive power trader model is the one that will it runs every day and finds opportunities in the market. Right? Which stocks will outperform the market short term? Right? The vector, the time that it's analyzing is a couple days, right? So you can hold the position for a couple days, maybe a week, but these are short-term trading. So you can see today we had. Let me make this bigger. Right, EXC, for example. Right. So some of the utilities. Above 200, above 50-day moving average. This is where people are still hiding, right? In some of the utilities. So that looks good. That is the trade idea. If you want to get, dividend, if you're looking for dividends and you're looking for, bullish momentum, then EXC is one, KR, HRL, right? There are also some of the consumer staples, some of the utilities, some of the traditional safety asset classes are still holding up pretty well, right? So you can, these are the places that you can trade. If I trade, then you would see my orders, right? My positions if I trade them. So Spiders, I added to my Spiders put spread. So this is one thing that you can also see as a hedging mechanism. Positions, you can enter your phone number, right? You can look at the history of, what about yesterday, right? What were the signals from yesterday? Also it's a GT. People need tires, right? So that, also above 200, above 50-day moving average, Goodyear tires are on the list, right? So these, it's a signal generating based on our AI models. We give you suggested entry points, right? Buy and sell zone. You can see what our model predicts. For Spiders, model predicts in the next 10 days we could be at 520, right? In the next couple of months, it does see that potentially we can get to 570, 580, maybe 590, right? I agree with the model. Maybe 590 is too optimistic, but you know, 568, 570, I think it's totally, you know, another 4% move on S&P or 5% move on S&P is totally within reach. So that would be the model, right? And you can see it's pretty wide range, especially as VIX was near 60, right? We haven't seen VIX at 60 levels since COVID. So 530, 529, 439. So model basically helps you make a decision that maybe at 540, 550, market is overbought, and you want to be patient. Much better entry point is 530, right? 520, 530 level. So model will tell you that every day, what the, you know, optimal entry points and exit points if you want to buy or sell. It gives you longer term trend, and you can analyze your own stock, right? You know, right now I'm trading, let's say, what do I trade? NVIDIA, right? So I have NVIDIA position. You can type in NVIDIA, click on you know, AI analysis, and it will tell you, you know, NVIDIA is not in downtrend, right? It's bearish. It turned bearish. But short term, you know, you could have more room to the upside, maybe 114 level, maybe 115 level. So that's aggressive power trader. Similar fashion, weekly power trader. If you look at the weekly power trader, and please type in any questions you might have. Weekly power trader, you know, same good year, Philip Morris, Gilead, some of the healthcare stocks, TJX, T-Mobile. So you have a lot of stocks that are for longer time horizon, right? Basically, maybe the model predicts for the next 5 to 10 days based on the trend, but it could be, you know, you can hold this for maybe a few weeks, maybe a month. In any event, you know, model, we do suggest to have only 4 active, because it's a trader's market, right? We could have these stagflation similar to 70s and 80s, where we're not going to make new highs in the next couple of years, right? For now, I don't think that's the case. At least I don't trade as if we're in 70s and 80s, but it's possible, right? It just depends on duration of these tariffs and how long they will take into effect, right? Recently, we've seen the Trump administration is very conscientious of bond market and treasury market. When you see these dislocations, right, in the treasury market or bond market, they react, right? I don't think it's a coincidence that they announced the pause on Wednesday, right, of last week. There was a reason for that, because they seen this basis trade, and I don't know if you guys followed all the news, but basis trade, right, kind of all over the news. Explore prime difference between cash assets like, you know, treasury market and futures contract, right? Where you have these huge positions where you take that arbitrage, and then, you know, something happens in the market, people don't buy treasuries for whatever reason, right? And then you have unwinding of these billion-dollar positions, and you have, you know, a repo market that dries out, and downstream effect into even equity markets. So there's definitely still reasons to be concerned, right? But assuming that, you know, treasury market, we're not going to have like a COVID type of dislocation, right, where government has to interfere and start printing money, assuming we're not going to have these black swan events, I still think that the bull market will resume, maybe not this year, but at least next year, right? So that's weekly power trader. But in all of these signals, aggressive power trader and weekly power trader, you would trade basically on your own. We give you signals. Some of these positions, you know, I trade, some are not, but you have to make a decision what to trade. You can watch our, you know, webinar recordings and live trading room recordings. We also have a, you know, library of different videos that you can watch, but that would be the setup. If you want to see what I trade, then you can go to Dynamic Power Trader, right? Dynamic Power Trader is combination of both stock and option trades that you can see. So NVIDIA, right? I've been trading NVIDIA for the past few days, weeks. Right, so I bought NVIDIA at $6.40, closed it at $9, and bought it again at $6.40. Right, lower, you know, raise the strikes up, taking profit and reducing my exposure. So I'm long NVIDIA, right? And at the same time, I'm long spiders, put spread, right? So there's one way to hedge is you can buy spiders put spread. So I added to a spider put spread, in case market does reach 500 again by June. I did buy a Spiders put spread. If you're not comfortable trading options, I did add to SH, which is inverse ETF. You don't need to, if you use, a lot of people are just not comfortable trading options, totally understand. I think one way to hedge is SH, right? Because, Treasury is not working, right? During market sell-off, Treasury also sold off, dollar also sold off. That's why one of the reasons, people are scratching their heads, what's going on, why these traditional safe havens don't work. I mean, gold did, right? Gold continues to make new highs. So this is one place you can hide, right? Gold, some of the healthcare stocks, some of the, Goodyear, Procter & Gamble, Philip Morris, Kroger. But, it becoming more and more difficult, to time it. But, inverse ETFs like PSQ and SH, that they're not going anywhere. They're going to be one-to-one correlated to the market. And this is a way to hedge, right? So that's dynamic power trader, right? You have live trading room every first hour of the market open, second market, last hour. You can find the recordings here. Same thing, you can analyze any stocks you want for our AI models. You can look at the history of all the signals. And, if you want to leverage and instead of stocks, you want to trade options, then, you can trade, instead of buying stock, you can buy JP Morgan weekly options or monthly options. And again, we give you support, resistance levels, and the trend. So that's dynamic power trader. It's a combination of both stock and option trades. You can always go to dashboard and see explanation of all these services here with the video, right? Explaining each service, what you get and what the offer is. Earnings power trader. I did JP Morgan last week, so that worked well. Right now I'm doing United Airlines. So because there's still a lot of premium in the options, right? You can look, I mean, VIX has subsided, right? There's a lot of less fear and uncertainty, actually 20 handle again. So we're approaching this, March highs in terms of volatility, but we're definitely off the highs, the 60. So volatility has subsided. I mean, you could have that second wave, but nonetheless, a lot less volatility, but a lot higher than it was in, February, March 17. So that means you can still sell premium in some of these stocks that are announcing earnings. So earnings power trader, right now I'm trading United Airlines, right? Selling United Airlines put spread, potentially if there is a positive surprise like Delta Airline, doing a butterfly. So it's a combination of either butterflies, iron condors, sometimes I do calendar spreads, and JP Morgan I did calendar spread, but these are opportunities where you have a well-defined risk, right? I'm risking 35 cents on that butterfly, right? So the most I can lose is 35 cents. But the profit, it could be $1, it could be, more. So you can do 2 times, 3 times return on the investment. You can, if you follow my recent trades, like SMTC was, you could. This is an opportunity to structure your trade using options where you have these outsized returns. And that's what I'm trying to do with United Airlines. And finally, if you just feel more comfortable trading stocks, Profit Accelerator. Profit Accelerator, this is, only stocks, and you can see, I'm long JP Morgan, ETN, Morgan Stanley. So these are some of the stock positions. Tim, spiders fell off fair amount in the last hour. Well, one reason VIX is at 30. What seems like a lot when VIX is at 30 is actually not a lot, right? Like when VIX is at 20, market moves 1% a day, right? On average, less than 1%. But when VIX is at 30, it moves, you can move, as much as, 1.5%. When VIX is at 60, it can move, 3 to 4% a day. So if you look at the support and resistance, the main reason is because of this position, right? If you look at, let's say today, right? Let's just forget all the other expirations and let's just concentrate on today and tomorrow, right? So you can see in SPX, Still very high position, right? $1 billion worth of position at this 550 strike, 547. So this is 550 strike, right? It acts as the overhead resistance, right? We're trading at 540, or actually 538, right? And support is, well, there's not much support here, but I know there is a support at 530 in other expiration months. So one of the reasons, right? One of the reasons why right, where market is pulled back is because if it's unable to break through this overhead resistance, right? If it's unable to break through this overhead resistance, then it will navigate back to, well, we're already at 540, so now, you know, we're going to the 530 level. And if I actually select April 17th, right, which is Friday, you do have some support 530, 535, but right now 540. Where are we in SPX? We're exactly at 540, right? So we're exactly at 540. Same thing, you know. Unless there is a news, we're probably not going to break 540. But if we do it, that opens immediately to the 530 level. But it's a 50% retracement. This is also a gap after the, you know, Liberation Day. That's why to break through this wall, this is kind of going back to the physics, you need to apply some kind of energy that will get equilibrium, will move the equilibrium between bulls and bears. And since there is no new news today, there are no news today, it's just a very kind of a complacent market compared, in relative terms, compared to the past few weeks. So Tim, let me know if it makes sense. Because of very large position at 5,500, just in general, I don't think we're gonna get out of this zone, you know, Wednesday, Thursday, right? We have 2 more sessions, right? Wednesday and Thursday. So I'll be surprised that we get above this level. I also gonna be surprised if we drop below 530, 525 level, right? This level. Next week, I think we will have a probably breakout, either above 5,500 or below 5,300. But that's not going to happen till next week because of the expiration. Any questions? Michael, Gloria, Jack, Pam, Tim, Mr. Simon, Dr. Kevin, David, Charles, Michael, Steve, anyone else? Any other questions? So those would be the levels that I would watch, right? So for now, kind of complacent. I think the bottom line, we're probably in a trader's market, right? I don't think this is a investor market. So you have to kind of be conscious of these resistance levels. So on SPX, this is the overhead resistance. If we break through this, I think the next overhead resistance, which is a lot longer in terms of duration, would be, you know, 575, 580, this line. So those are the 2 resistance levels. That's something to watch. And basically how these resistance levels work, until you break through them, you know, when you overbought, then, you know, you do have a chance that we could, you know, on any negative news, we could quickly get back at least to 5,300, 5,200. Today, Bank of America had earnings. They're doing better, but still, in terms of chart price pattern, you don't see much difference. We have United Airlines tomorrow, Nvidia slightly higher, Citigroup, so they're doing well. Netflix going into the earnings is one of the better. From Magnificent Seven, Netflix is probably the best chart out there. Apple got some break from the tariffs. It did give up most of those gains already from the pause in the electronics tariffs, or at least rethinking of that. Meta has been weak on lawsuits and, you know, monopoly. So that's been a strong stock, but it's been outperformer all the way to end of February, but then it's been underperforming since then. Apple, we talked about it. Tesla has been under a lot of pressure, not going anywhere. So Magnificent Seven, outside of Netflix, are very weak as well, including Microsoft. We talked about banks are doing better. What else we have? I mean, home builders are weak, right? There's not a lot of activity in home building market. Interest rates are still elevated. VIX are below 30. I think that's positive, but also oversold, right? This is an important level to watch. Right, we're right at that. For the market to break above 550 spiders, the VIX has to probably drop to 24 level, 22 level. So I'm watching VIX, industrials. I mean, same pattern as QQQ and spiders, nothing different. Dollar is above 100. I think that's a little sign of relief. Healthcare not doing that much different. Consumer stress, discretionary under pressure. Retail is under pressure. Transportation is under pressure. QQQ flat. Value stocks in general today are weaker. Consumer staples taking a break. That's about it. All right, any questions in terms of short-term support, resistance, what to expect next? Any questions on any of the yellow tunnel services? So we do have a lot of free content. We have a blog every Sunday, publishing a blog. We have live trading room recordings of these webinars every Wednesday, Tuesday. You can watch this recording. So please add info at yellowtunnel.com so you can get these emails and recordings. They'll be under trend analysis. And consider a lot of people actually signing up for one-on-one coaching. So we do have a coaching team. So if this is, we haven't had market conditions. Some people say not until, you have to go back to global financial crisis to see this type of moves, dislocation, duration. I mean, COVID was pretty bad, but it was short-lived, right? A few weeks and it was over, right? This could be months, could be quarters, could be years. We haven't had that since 2001, 2003, right? The recession of 2001, 2003 lasted for a few years, right? September 11, global financial crisis lasted, this downward market for a few years. So if you haven't traded in these type of environments and you do want to learn, and from long-term perspective, these are right. If you invested in 2001 or if you invested in 2009, that these are one in a decade type of opportunities. So if you want to share our experience, Keith, myself, and our coaching team, then click on coaching, submit your information. I think this is, it takes time and money, but this is an opportunity, right? Especially if you have a long-term horizon, there is an opportunity. Maybe, this year it's going to be a trader's market, but, next decade, I'm sure the bull market will resume, right? Because I don't think investing in China or Germany makes more sense than investing in the United States. Best hedge for June, spiders 550, 500 put spread. I like it. Yeah, 550, 500. That's if you're very bearish. I did 500, 475. I'm less bearish, right? Because I think short term it's going higher. But if you're more bearish than I am, then yes, 500 to 550 to 500 put makes sense, Charles. That was all the tariff negotiation. Tim, Apple, because on one hand, they give them a tariff exemption, but the other hand, they did say that we're going to revisit this and see what happens. So the chart of Apple is not different than QQQ or spiders. It's identical, or Nvidia for that matter. They're very similar. Crypto, I do agree. One hand, people were saying, well, crypto is safe haven. It hasn't been a safe haven, right? It went from what was the peak? 110 to 74,000. So it dropped, straight in the bear market. But it's above 200, it's above 50. It has not sold off. Maybe because it sold off a lot more before that. But for now, it's holding on pretty well. And crypto is a good proxy for risk taking. So I agree, this is a good sign that crypto is not selling off. Another good sign is the copper prices, right? They precipitate, I mean, elevator up, elevator down, another elevator up. But that's a good sign that at least copper is stable now and had a pretty meaningful rebound. So that's positive. People are jumping back to, I was concerned about high grade corporate bonds, right? Kind of during COVID, even AAA corporate bonds would still be sold off. It has recovered 50% of the losses. I think that's positive together with the market there. So there's more stability in the bond market, more stability in junk bonds, same price pattern and setup. So there are signs that maybe the worst, that the bottom is in place. So I do think, assuming there is no black swan event like regional banks going under or some hedge funds going under because of these moves in the bond market, assuming, and you can predict, so assuming we're not going to have those news, I think the bottom is in place, right? But it's going to be a violent process, and most likely this year, I would not be surprised that we're going to revisit this bottom at least a few times, right? Because I'm assuming 2025 is going to look like almost the same or very similar to 2018, right? It's not like we've never seen these market conditions. In 2018, it was the same setup, right? Tariffs started, maybe magnitude wasn't as high, but same thing. We were targeting Canada, Mexico, Europe first, then China, then we signed deals with tariff, with Mexico and Canada and European Union. China took a little longer, right? But the year we ended basically flat, right? 2018, 2019, flat. So, but obviously we had a 20% pullback. We made new highs. So I would not be surprised to make, new highs this year, but I don't think they're going to last that long, like in 2018, maybe a couple months. And then I would not be surprised if we revisit the lows or even break the lows, right? None of these events would surprise me. So I still think it's a trader's market. So, you probably don't want to trade alone. You want to be part of the community. Live trading room, ask questions, see what I trade, see what Keith trades. Keith has a lot of experience from market maker perspective, options data. So he's very knowledgeable about options, market making, hedge funds. That's his bread and butter. I'm very knowledgeable in those areas, but I didn't work. My background is more artificial intelligence, technology, building neural networks, managing teams. That's kind of what my background is. So I hope you guys can take advantage of what we have to offer. And I know some of you are already subscribers, so I appreciate that. Some of you are considering, so that's good. Tim, any recommended trade section on this site? Yeah. So I went over, we have different services with different ideas. So aggressive power trader and weekly power trader, you can find signals, right, every day on aggressive power trader, weekly power trader every week. Some of these signals I trade, some of them I don't. Dynamic power trader, earnings power trader, and profit accelerator, these are my actual trades. And you can see my orders. You can see, like in dynamic power trader, you can go to my orders. You can order my positions, and you will see what I'm trading. Morgan Stanley, Capital One Financial, option trades. And if you go to dashboard, you can actually, on the bottom here, it will explain each of these services. So hopefully you can take advantage of that. Tim, let me know if it makes sense. Usually 8:15. So the question is, when is the live trading room open? So 8:20. So every morning 8:20 Central Time, 9:20 Eastern Time, right? 6:20 Pacific Time. But 10 minutes, you can get in there 10 minutes before market opens. 10 minutes before market opens, I'm usually there, or Keith is there, and that's when the live trading room starts. Thank you, team. Any other questions? All right, we have a lot of people today. I appreciate you guys being here. Thank you so much. And I will see you guys soon. Thank you. Hopefully in the live trading room. Thanks a lot, guys. Thank you, Charles, Jim. Thank you, Kevin. Thank you, David, Mr. Simon, Dr. Tim. Welcome, Jack, Frank, Gloria, Michael, Sean. Fred. Thanks a lot, and I will see you next week. All right, Tim. Thank you.